Good morning, Wall Street winners. It is Thursday, April the 17th, and it really is like investing during a war right now where bombs are going off around us. The bombs may not be the physical kind, but they're economic bombs that are blowing things up and destroying infrastructure that we've been accustomed to being able to leverage. The latest threat out there that may turn into a bomb at some point is Trump's wanting to have the Fed Chairman Jerome Powell terminated because he's not lowering interest rates at the speed at which Trump would like. So if you're not doing things as quickly as he wants, in order to meet his strategy, if he even has one, he's looking at eliminating people there. We saw this morning that United Health just got decimated in terms of a stock price. It's down a significant amount, and it's taken things like Humana and other healthcare companies with it after cutting its outlook on care costs. So that's another bomb that's gone off in healthcare. If we scroll down further, we can see that China has pivoted to buying oil from Canada over the US. That's only going to hurt the US economy. It's going to help Canada slightly, but Canada was selling that oil anyway. So they're just selling it to a different country at this point, but that's going to affect U.S. oil production and potentially the cost of oil, going to require them to import oil. Trump keeps talking about how they're going to drill, baby, drill. They've got enough oil, but they don't. And at the price they have, they've set crude at this point, or they've managed to get crude down to. It's not worth drilling at. So it's now, I think, close to $63 a barrel, but it's just hovering in that low 60 range. And although that keeps energy prices somewhat lower, although a number of things the administration has done has raised energy prices for a number of Americans by taking off some discounts or some rebates that were imposed by the Biden administration through, I think, the infrastructure bill. I'm not 100% sure there. A lot of different things going on. The one bright spot here, if we scroll through, I'm not sure if it's listed in this list itself, is around TSMC. And TSMC, here we go, did actually provide some quarterly update today, and they had, I believe it was a 60% increase in profit, in gross profit margin. It was a huge number. And so their stock is up, as are all are kind of recovering from yesterday. So yesterday was a pretty horrific day, and another horrific day in the markets. The Dow was off close to 2%. 1.73. The S&P was down 2.25%, and the NASDAQ was off 3%. If we look at the futures today, you can see they're getting a bit of a lift. I don't even think these are correct, to be honest, because they have updated now. They were off this morning, so maybe it's just a timing issue. Anyway, they appear to be up. If we flip over to the Yahoo Finance app, you can see that crude is up above 63, up 93 cents today, but who knows if it's going to stay there. It's been bouncing around, and the volatility in crude has just been extremely high lately, which makes it an interesting option to trade. Not one that I do trade, but with that volatility, there's definitely some movement. The VIX is only up to just under 32. I'm a little boggled by this. To me, with what happened yesterday and the uncertainty in the markets, Trump wanting to get rid of the Federal Reserve Chairman Jerome Powell, China not willing to negotiate at this point, Trump saying that they're really close to a deal with Japan, but it's the only country we've heard they're close to a deal with because the EU's walked away from the table after trying to negotiate a deal. It just feels like none of these 70 countries are ultimately working through a deal. All of this is misinformation that we're getting out of the White House. The numbers are bad, and as we go through earnings, I think you have to take an approach where if you buy a stock ahead of earnings hoping for a pop and it pops, sell it and take your profit, because we'll look at an example in a minute of Goldman and Morgan Stanley, and both of them yesterday got killed, and for no particular reason, because they've proven that they're resilient and they're in great shape, and they're probably in one of the better sectors and specific niche sectors of banking, because they have a big trading arm to be able to weather at least the first quarter of this before things really get impacted. So if we scroll down through health and retail, you can see here that it was pretty bloody yesterday on the screen. There's a little bit of green here, but I mean, not worth putting your money into, in my opinion. Humana, there you go, down $38.50. Like, just getting crushed. It's got earnings coming in 13 days, so maybe it'll rebound, or maybe it'll have the same announcement that came out of United Healthcare this morning. JB Hunt got clobbered yesterday, so down in the mid 120s. Off $10.50 after some not so bad results there, really, but expecting a big slowdown in intermodal shipping and transport. You've got utilities and oil. Utilities actually, well, Vistra fared well. Ed was down, Con Ed, yesterday. Looks like Vistra's up again today for whatever reason, and it does seem like, because crude is up 85 cents now, so it is dropping, that oil stocks are currently in the green. We're still 2 hours away from the open. Then you get down into technology, and it's a sea of red in technology, with very few exceptions, Cloudflare being one of them. Cloudflare is announcing earlier than most. So you'll see here that, where are we? It's going to, can't even find where it announces anymore. They've changed the layout here. Well, we'll come back to that. But its announcement is coming up in the next couple of weeks. And then we've got Netflix, which was kind of the only company that was holding its own this week. It was even in the red yesterday, down almost $15. It's up $10 in the pre-market. It announces after market today. The one company with earnings that came out this morning was TSMC. So you can see that they're up 3% in the morning session, although they have dropped off of the highs. They were up around 160. They've come down, hit a low of about 154, still up from yesterday, and then look to be climbing in the early market today on positive earnings. Just see if that earnings report is down here. Don't believe it is. So we've got this. I'm not sure that was the article I was looking at before, but they did post some pretty positive earnings. Yeah, it's not there. It's just a link to it. So that's one to keep an eye on today, as is Netflix. I think it will post some good numbers after the close today. And then we go down into financials, and let's look at the example I gave earlier of Goldman. So Goldman was a stock that was $4.93 going into earnings this week. If we look at the 5-day, it then announced earnings, and it jumped up to the low 5 teens, and then came down and settled around, I think, 503, popped up to 510, 515 the next day, and now it's down at 499. So if you hadn't have sold and taken your profit, you'd still be up, but certainly not up the same percentage or same dollar equivalent that you would have been if you just had have taken some profits earlier. So we just don't know. It's the uncertainty and the Truth Social posts that come out, the misleading information, the different narratives of the different news media channels. It's just a sad reality that we're in right now, and it's hard to change. So it's frustrating. You want to change it. You want to see things change and kind of go back to where they were when things were good. But we have to work our way through this. So we have to figure out, we need to be thinking like a chess player. You need to be thinking 2 or 3 steps ahead. So what's the next domino that could fall or that will fall, and how will that affect other things? And try to think a few months out as well, because we're really not going to hear about the economic impact that these tariffs are going to have until 2 or 3 months down the road. And when you think about Liberation Day being April 2nd, and then the 90-day pause shortly after that, a couple weeks after that, we're not going to see tariffs re-implemented, if they're re-implemented, until July 4th. So Independence Day could be a complete gong show. It really could be Independence Day. I mean, it could lead to a civil war in the U.S. With all the mayhem that is being caused by the administration. Let's hope it doesn't get to that. But it could be another significant bomb dropping and going off in the economy. But we should have we're going to have a lot of little explosions, little economic explosions as we move forward. And you really just want to be extremely cautious and risk averse right now and guard your capital, because there's really no telling where this is going to take the United States at this point. A lot of things in the courts right now that will play out, but will take a fair bit of time to play out. And depending on the outcome, could change the impact of tariffs and really the power of the presidency and the presidential office. But we have to wait for those decisions to come before we have more information. So again, more uncertainty in these crazy times. So try to pick companies, if you are going to continue to invest in equities, try to pick companies that don't sell products, that sell services, sell software, that are less impacted and less affected by the tariffs. But even there, I mean, there are concerns over chips being sold into China, and China may be starting to source and produce its own semiconductor chips. But beyond that, you're also impacted by China is developing its own operating system. So it's not going to leverage Windows. That's going to take a hit on Microsoft. It's not going to use Oracle databases. So that's going to that's going to affect Oracle. It's not going to use, certainly not going to use Amazon or Google Cloud. It doesn't use Google Now. It's going to use other things. So there's really a huge divide in technology right now and a separation. And if some of the technologies that the Chinese come up with, like an alternative to Google, are much better, those could potentially be adopted outside of China as well. That's a very long-term kind of view there, but it is something to keep an eye on, because they could achieve some level of technology dominance throughout this growth period with all of the R&D and exploration going on there to allow them to achieve a level of independence. And that could impact the market share of US-based companies. Primarily, tech companies are primarily US-based. So that's where we are today. I hope you have a great Easter weekend and spend some time with your family. Good luck in your trades. And if you like these videos, please hit the like and subscribe button.